All right, welcome to today's seminar. Okay, Ying normally gives Saturday's webinar, but she's got some other things she has to attend, so I'm covering for her just for this one time today. So hopefully I won't disappoint you. But the topic that we're going to talk about today, Ying will repeat them in a more extended fashion at a later date, so you won't miss anything. If you, well, whatever, you didn't get all you wanted from me today. All right, so let's go ahead. So I'm going to share screen. So we'll talk about what's new for 2021 tax. So with some tips for small businesses. As mentioned earlier, so if you missed, so Ying, our usual speaker, she's attending something else right now, so I'm covering for her this one time. Okay. And many of you, if you are a regular attendee of this webinar, so you probably have seen this advertisement for her, and actually it's a useful information for everybody anyway. So she actually wrote a book, and 3 more are coming. That's a book on how to start your business, and how to grow your business, and how to further develop your business, and how to sunset your business when you retire. So these are reflecting the book title, with 8 a.m. I believe the next one is 10 a.m. and then 2 p.m. and 6 p.m. So that reflects the series. Okay, so the 8 a.m. book has been out for a while, so that's available on Amazon. Okay, so anyone who is interested can go take a look. All right, as I mentioned, I'm covering her webinar today. So I myself is not without the qualification, so because I have a PhD degree and I am a professor. Okay, and the usual disclaimer. So basically, if you're just listening and you're relying on this information, do everything on your own, or take it somewhere else. So we cannot take any responsibilities. So we encourage everyone to become our clients. So that we can give you the timely update of whatever changes that are made in the government rules, and also communicate with you timely the most up-to-date information, as well as take care of all of your tax and other needs. So the 2021 tax season is just around the corner. In fact, if this were a normal year, the tax season would have already started. Because normally the tax season starts on January 15th, but this year the IRS has announced that it's going to be postponed to, the start date would be postponed to February 12th. But even that's just less than a week away from today. And the main reason for IRS delay is that the Congress passed a new law that was signed into law by then President Trump on December 27th, the Consolidated Appropriations Act, or for short CAA, and that contains, in fact, numerous tax provisions. So here I just mentioned a few. Many of you probably have heard of the second stimulus check, and also there was PPP if you were running a business. There are payrolls, and PPP or EIDL grant, and also there are some pension withdrawals provisions as well. So there are many other tax provisions that were contained in the CAA, and so there's just not enough time for IRS to update their regulations, and also for the software companies to update their tax softwares as well. So the IRS postponed that to February 12th. But even that's just coming very soon. So we want everybody to get ready for the 2021 tax filing. Really, so the 2021 tax filing, of course, is for the 2020 tax return. I'll clarify that in a moment again as well. Also, we really are not missing anything by this postponement of the start of the tax season, because there was a law, the PASS Act, that was enacted in 2015, I believe. That law prohibits IRS from issuing refunds involving the EITC and some other additional child tax credit before mid-February. So you will not be able to get those refunds anyway before mid-February. So we really are not losing out much from IRS postponement of the tax season start date. All right, so the title of today's talk is about 2021 tax. So that could mean two different things. One is the 2021 tax filing, and the other one is 2021 tax planning. So for the 2021 tax filing, we really actually are talking about filing 2020 tax return. And then if we're talking about 2021 tax planning, we are talking about how we're going to plan this whole year, the current year's tax affairs. So in other words, then just so to avoid confusion, I just use the terminology of say 2020 tax and 2021 tax. Okay, so when we say 2020 tax, meaning that we are filing right now in the tax season, in the 2021 tax season, but we actually are filing 2020 tax. And then if we are doing planning, so basically we want to try to manage our 2021 taxes. So for filing in 2022, I'll just say that's 2021 tax. Okay. All right. So I'm going to quickly summarize various changes in both the 2020 and 2021 taxes. Well, I guess I wasn't aligned, and not everything was aligned properly. Okay, but hopefully I'll explain things a little more clearly when we get there. Okay, so first, a quick summary of a couple of items that are unrelated to the pandemic. And these, so we know that every year, due to inflation adjustment, there are changes to things such as tax brackets and standard deduction limits. And so here, I'm just using a single filer as an example. Okay, for instance, in 2020. So the tax brackets are, from 0 to 9,875. That's 10% bracket. And in 2021, the current tax year, but of course, this is for filing in 2022. Okay, and so we're now doing we're filing 2020 tax. So this is the one that we're looking at for this tax season. Okay, so the 2020. The 10% or the first tax bracket is from 0 to 9,875, and for 2021 taxes, this is raised by about $100, so maybe $75. Okay, so the next tax bracket also go up. So it's from for the 2020 is from 9,875 to 40125, but in 2021, that's pushed up a little. Okay, but the tax rate does not change. Okay, so normally we could expect the tax, not only the bracket change, but also the tax rate change. But for the 2020 and 2021, it's the same tax rate. Okay, just the brackets are slightly different due to inflation adjustment. These are unrelated to COVID-19. So these are the things that we see every year. So there will be some adjustment to tax brackets, and as well as the adjustment to standard deductions. So again, I use a single filer as an example to give you a general idea. So in the 2020, the standard deduction limit is 12,400, but in 2021, and that's raised slightly, so 12,500. I believe that might be 12,550 instead of 1,200. $12,555. Okay, so it might be a $5 off there. Okay, but anyway, so these are changes we see every year. And then we've just gone through a weird year. To many people, it's actually it's a sad year for those that lost some of their loved ones. But everybody suffered through the pandemic. And so there are a number of changes that were enacted by the Congress. Those are specific for the 2020 and possibly 2021 tax years. So for 2020, again, so this is the one that we're filing in this tax season right now. Okay, so remember that we received 2 rounds of stimulus checks. One for $1,200 and the other one for $600. Again, I use a single filer as an example to simplify the description. Okay, and also there's a simplified charitable donation filing. So basically, instead of doing an itemized deduction, you can just claim they call it above the line total amount of $300 for charitable donations. And also the required minimum distribution. These are for seniors, so the people around 70, for instance. So there's a required minimum distribution in normal years, and in 2020, that the requirement is removed. But of course, for many people, people are more concerned about withdrawing money rather than getting money distributed. Okay, so there's also a provision for that. So actually, there's for 2020, there's no penalty if you withdraw money due to for COVID-related reasons. All right, so also there's a provision related to flex money. If you have a flex account, and if there's any left over in 2020, that will be rolled over into 2021. And that rollover provision is also going to be available in 2021. So in other words, any money left over in 2021 flex account, that would be rolled over in 2022. Okay, so for those of you who have used that account, flex account, we know that normally if you any money left over, if you didn't claim it by whatever deadline, such as the end of April of the following year, and then you lose all that money. Okay, so that money will be forfeited. Any unclaimed amount will be forfeited. But there's a special provision for 2020 as well as 2021. So whatever money left over there would be rolled over into the next year. All right, and there are also some provisions related to the earned income tax credit calculation on your 2020 tax return. And of course, this is applicable only to people with low income. So you can actually use, for those qualified people, you can actually use your 2019 figure to calculate that EITC. So presumably, let's say you earned less in 2020 in that situation, so then you can get a higher EITC amount if you use the 2019 figure to do the calculation. Okay, so that's probably somewhat related to the PPP second draw. For those people who are familiar with the PPP second draw at all, okay. So for PPP second draw, you can use either the 2019 company salary amount or the 2020 company salary amount, whichever is higher. You choose the higher one to do the PPP loan amount calculation. So I think the EITC is in a similar spirit. And also there is a qualification requirement for that. And again, that's that's similar to the PPP second draw as well, because for PPP second draw, you have to have suffered a quarterly income loss of 25% or more, So then for this EITC, but this is on the personal level, of course. It's not a company level matter. This is personal level, and then you can use either your 2020 figures or the 2019 figures to calculate your EITC, and if your income is below a certain threshold. Okay, so this is only for people that are low income. All right, so there are some anyway. So these are some changes related to the COVID. Okay, also okay. There are some COVID-related tax provision changes that are applicable to businesses. Okay, so many of our employees, as well as the listeners to this webinar, are small business owners or managers, and so there are several tax provisions that are contained in both the CARES Act and the CAA Act, the Consolidated Appropriations Act. The CARES Act was passed on March 27th, I believe. So the CAA was enacted on December 27th of last year. So both provisions have tax-related provisions, both at the personal level as well as the business level. And also CAA, the one passed at year end, extended several tax provisions that were already contained in the CARES Act. Okay, by no means what we're talking about today are exhaustive list of tax provisions, the tax provision changes. So these are just the ones that we quickly summarized. So I basically fit them out into one sheet. So obviously we are leaving some out. So hopefully the main ones that are relevant and that the most people care about are summarized in here already. Okay. But of course, for more complete ones, we have other seminars. In fact, Ying, as I mentioned in the beginning, Ying will be giving another webinar on basically the same topics. So I'm just talking about everything very superficially, like a quick overview, and then she's going to talk about things in a more detailed manner. She will probably also cover more of those tax provisions, including those ones that are left out in this talk. Okay, so the tax provisions related to small businesses. Okay, so in the 2020 tax returns or 2020 tax matters. So again, as I mentioned, so this sheet is related to small businesses. Okay, so for 2020, and most small businesses have received the PPP-1 as well as a EIDL grant. By EIDL grant, I mean the advance part. Okay, so that's $1,000 per employee up to $10,000. So that's the EIDL grant. Okay, so the PPP first draw money that your business obtained, as well as the EIDL grant portion, the CAA Act clarified that these will not be, and you do not count this as your income. Additionally, the expenses paid by those money, you can still use those expenses to offset your regular business incomes. Okay, so in other words, so the PPP money as well as the EIDL grant money, okay, not the additional loan part, but just the grant part. Okay, so the EIDL grant part, those two amounts of money really don't even come into your tax forms, or even if they come onto your tax form somehow, if the tax form requires. So there will be another line to just offset them, and they will be in and out. So basically, those two items will have no effect on your business tax return. Okay, so you do not count them as income, and also even the expenses paid by those, you can still count those expenses as if you paid with your own money, with your business's money, so you can still list your expenses as if you never got those money. Okay, so in other words, those two amounts don't come into your tax return at all, don't affect your tax return at all. And so that will for your 2021 tax, and we so many businesses qualifies for PPP second draw. Okay, so that is going on right now. Okay, so that will happen in 2021. Second draw happens in 2021, and so that we have the same story. So the PPP second draw, if you qualify, of course, and if you obtain it, and if you qualify and obtain the PPP second draw, will not have any effect on your business tax return, because they will not be counted as income, and the expenses paid by them, you can still list those expenses on your tax return to offset your regular business income. Okay, and also there is a very limited amount of EIDL grant that's going out this year as well. Okay, but of course that's very hard to qualify, because I won't go into the details of it, but that very small, very small percentage of people or businesses would qualify for that. But if you are one of those, then you get some additional EIDL grant, or if you never got last year and then you now somehow qualified, you got the EIDL grant, and so the same story. Okay, so the EIDL grant part is not counted as a business income, and expenses paid by that can still be listed on your tax return to offset regular business income. Okay, and there's also a employee retention credit. We actually, in one of the prior webinars that Ying gave, she covered that already, and so this that's for pretty much the whole year, although it starting March 12th of 2020 all the way through the end of 2020. There's an employee retention credit, so that's a payroll tax credit. That's not a company income tax credit, but that's a payroll tax credit. Here we are talking about small business related on this sheet. So that's the payroll tax, and then that was extended. That benefit was extended by the CAA Act, so into the first 2 quarters of 2021. So then we are still enjoying the same tax credit, payroll tax credit in 2021. Okay, but again, so just like a PPP second draw, so in the ERC, there are the employee retention credit, there are some qualifiers, there's some qualification requirements, so not all employers qualify that, but if you do, and then so you can you get that tax credit for most part of 2020 as well as first 2 quarters 2021 if you qualify. And there's also a provision related to business meals and for 2021 year. Okay, so the current tax year, the business meals can be deducted 100%. Okay, so for 2020 tax, again, this is the one that we are filing during this tax season right now. Okay, so we still have to follow the old rule or the standard rule. So that's a 50% business meal deduction. Another one related to businesses is the deferral of employee payroll tax. Okay, so this is more of a benefit on the employee than on the employer, but again, nonetheless, that's business related. And so, as you know, so as an employee, if you're an employee, so you are responsible for a portion of the payroll tax, and the employer also need to come up with a matching amount of payroll tax, and together the two portions together goes to the government. Goes to the government, and so there's a deferral of an employee payroll tax provision. So employee, your portion, you can defer that into future, and then that benefit ends at the end of the first quarter of this year. Okay, so in other words, you can still take advantage of that for one more quarter in 2021. Also, there is for 2020, so there's a provision on student debt. So if your employer pays for the student debt, so ordinarily that's counted as a taxable benefit. Okay, basically that would be counted as taxable income on your W-2 if your employer does that in a normal year. But because of the COVID, so government is providing relief on that. So if your employer is generous enough to and pay for your student debt, so then the employer will not pay for employer's portion of payroll tax, and the employee who took the student debt originally also would not be paying the payroll tax. So no payroll tax on the student debt if that's paid by the employer. Okay, so no payroll tax on both the employee and on the employer. We're not aware of that, the extension of that benefit to 2021 tax year, but you probably have heard of talks about student loan forgiven completely. So there are people pushing for that. So we don't know what's going to happen to that. So even if it's partially forgiven, and that's still good news for those with student loans. All right, so I think that is a quick summary of the tax provision changes. Okay, so that's both that we know of, both for 2020 and for 2021, and obviously, so there's a new administration at the federal level. So now also both the Senate and the House are controlled by the Democrats. So there can be new provisions and new laws related to taxes for 2021 that may come out this year. So if that happens, we will update in a future webinar. Okay, so that should end today's talk. So let me quickly see if there's any questions. All right, so I don't know if I did a good job of explaining everything, or people are looking forward to listening to Ying's talk, either way. So I thank you for your participation in this webinar, and well, that'll be all, and see you next time.